Let's get across the market open. Mark Gardner joining us from MPC Markets. Mark, happy Monday to you. Now,
Indeed.
The focus on, this week, very much on that July 9 deadline from Donald Trump. That said, markets, of course, in the US were closed on Friday. What are futures doing?
Futures have dropped a little bit. Over the weekend, Trump and Besson have come out and said they're going to extend till August the 1st. So you would think that would give the market some positivity, but he's also said that there is going to be a speech today or tonight, I'm assuming our time, where they're going to specifically target 12 nations. There's been a bit of pushback from the Japanese Prime Minister, also a few comments from the Chinese, but we've also got the BRICS summit going on over the next few days as well. So really is, Brazil, Russia, India, China, South Africa's chance, and then I think they've got about 25 to 30 other nations coming where they're really pushing to remove that reserve currency status of the US, and move back to a more, gold-backed currency, and to prevent them from printing. But there could be some statements come out of that, but I think just more fighting words, I suppose, from President Trump, and then yet another deadline pushed. I can't see August 1. At that point, they would become a laughing stock. So he's going to have to get quite a few things done over the next, 25 odd days or 23 days, and that usually comes with a lot of threats.
So what do you think equity market investors are going to do this week then, with the prospect perhaps he is going to push out, has some more further concessions there, still just adds to that uncertainty though, bearing in mind we're at record levels both here and also on Wall Street?
I'd still be pretty defensive. I think the equity market generally has been, everything's positive basically at the moment. July is traditionally or seasonally a very positive month. It's September, October we've really got to worry about, and August. So I guess you're walking a fine line over the next probably 3 weeks, where you're probably in the clear a little bit for the next week or so to be buying, but I think you probably want to be selling into any strength towards the end of the month, because I think that that August 1 deadline and that seasonality. Weakness in August, September, particularly September being the only month in the S&P that is on average down 64% of months down. I don't think you want to be long at record highs at that point, and I think you want to be a little bit wary and have some cash available in the event that the market does dip, because you want to be picking up bargains leading into that seasonal rally towards the end of the year.
All right, so locally, what are you liking at the moment?
Still liking defence uranium stocks. I think if there is a bit more of a tariff war, the copper stocks particularly will do quite well. It's sort of that powering AI thematic I don't think is going to really be... It's very immune from tariffs, because we're talking about some of the richest companies in the world, which would be some of the richest countries in the world, needing to power AI, and the race for AI technology is a national security issue, and defence is obviously a national security issue. So I think we'll see those thematics stay fairly strong. We've obviously got a rate cut supposedly coming this week. On Tuesday, we'll just see obviously how dovish or hawkish Michelle Bullock is. I think that'll probably help some of the consumer stocks potentially, but we are coming into earnings season, both for the US starting next week, and our market starting in August. So, whether you want to be buying here at record highs, leading into confession season, after we've had all this turmoil over the last three and a half months since Liberation Day, I think it's a fairly risky roll of the dice, and I don't think there's any sort of shame in having some cash on the sidelines there.
Yeah, reporting season is just around the corner. What's your expectations for earnings?
I think we'll probably be slightly better than expected. I think the Australian market isn't as inherently bullish as the US, so we tend to be a little bit more realistic, I suppose. And I would think that we'll have an okay earnings season. I think whilst we got rate cuts, I think a few of the really pointy end of the consumer discretionary sectors might come back. But some of our growth names are, particularly in the tech sector, might do particularly well. So I think it'll be fairly patchy, but there are some bargains out there at the moment. I think particularly in the materials sector, they're priced to, they're priced to worst case scenario just about, even with that rally the other day. You've got Chinese stimulus starting to kick in a little bit. I think there'll be further stimulus as it comes along. So I think that'll really, reaffirm that there's some deep value in those, and then move on, and then a little bit of a pickup from there.
Mark, do you feel as though that rotation we've seen out of banks into the miners has traction now?
I think it will. I don't think it'll be a straight line, but there is definite value there. If you look at a historical standpoint, you've got the banks trading at fairly historically high PEs, the mining sector at fairly historical lows. They're all very stable companies in the mining sector, and you just need a little bit of pickup in some of these commodity prices, and a pickup in the Chinese economy, and they'll start to head back up to highs again. And we're talking, we're a good $14 odd away from highs in BHP. I think it got to about $52. And look, I think with copper at record highs. They've got that potash project coming online in the next 12 months as well, which is going to reduce that overall iron ore exposure. And I think that future-wise, I think this is probably one of the better opportunities to be getting along BHP for the coming years. So I think the market will start to see the value in that at some stage.
And also in commodities, you've had an exposure to precious metals, silver at a record.
Yeah, silver cracked a new record this morning. Well, not a record, sorry, a 15-year high. It's still a fair way from record, but we've also had platinum on as well. Platinum has actually been at a higher price than gold at stages in history, and it's only around about the $14.50 mark at the moment, so it's less than half of where gold is. But silver as well, once it breaks up above these highs, I really see the market starting to gain momentum. They've been building pressure as well. Copper's sitting only about probably 15 cents below record highs as well in US dollar terms. So, and they're going to need a lot of copper, and they're going to need a lot of obviously power as well. I think the uranium stocks are still very cheap here as well. So definitely compared to their global peers like Cameco.
How are you getting exposure to silver?
Silver, there's a couple of really small silver miners, but ETP MAG, which is just the physical silver ETF, that's just an easy and very clean way. But POL is one of the ones that Jonathan's been watching and is gaining a little bit of momentum as well. There's a silver miners ETF in the US if you've got US access, but overall I think that physical silver ETF is probably the cleanest way to get an exposure. Because the smaller miners are they can be a little bit tricky if they disappoint on earnings. But POL's just gone into production. It's in New South Wales, and that's one of Jonathan's favourites.